Good afternoon and welcome. We are going to go ahead and get started this afternoon with the 2026 FCS Financial Crop Insurance Update webinar. I'm Madison Farnan, Manager of Marketplace Engagement here at FCS Financial, and I'm excited to serve as your MC this afternoon. We know how valuable your time is, and especially as we gear up for a busy spring season, so we're excited to keep this session fast-paced and packed with the essentials. But before we dive into the 2026 updates, just a couple quick housekeeping items for you. Your microphones and cameras are currently disabled to allow for focus on our presenters, but we do want to hear from you. So please use the chat feature within the Microsoft Teams browser you're using at any time to submit questions or comments, and those will be relayed over to our presenters. So we will be monitoring those. But don't worry about taking frantic notes. Today's session is being recorded and will be sent out directly to you via the email that you used to register with. Additionally, we'll share some of this content on our social media and on our website as well if you need to share with other family and friends. So we are joined here today by two experts who aren't just experts in insurance. They're deeply rooted in Missouri agriculture, and I'm excited to get to introduce them. First, we have Jessica Hamill. Jessica is Vice President, Team Leader with 14 years at FCS Financial. She leads our insurance efforts across the eastern half of the state, and when she's not helping producers in Mexico and Jefferson City offices, she's running a cow-calf operation in Montauk County with her husband and two sons. And joining Jessica is going to be Sadie Connolly. She's Vice President of Insurance. Sadie has spent a decade with FCS Financial serving producers in central and north central Missouri. She grew up on a row crop and cattle farm in southern Boone County and still calls Columbia home today with her husband and two sons. Jessica and Sadie, I am excited to turn it over to you.
Thank you, Madison. We're excited to join you here today. Sadie always does a great job of having these conversations with her customers. We like to meet one-on-one and really just have open conversation. So today we're kind of joining you in, adding you into what those conversations look like. So Sadie and I will kind of go through some questions. We'll keep it pretty lighthearted, move kind of fast, and try to get everything covered in our short amount of time. So Sadie, to begin with, what is top of the list for discussions that you're having with customers this year?
Yeah, so with the One Big Beautiful Bill Act this year, we're seeing some additional changes to the crop insurance program for 2026. So that's going to include ECO and SCO subsidy changes, beginning farmer and rancher changes to the qualifications, T-yield changes for corn and grain sorghum, and then also some premium subsidy changes as well.
Yep. So you mentioned ECO and SCO. Give us kind of an overview. What are those? What do they mean?
Yeah, so ECO and SCO are area-based plans of insurance that are going to stack on top of your underlying multi-peril policy. So, for example, if you have an 80% coverage level on your policy, SCO, which is our supplemental coverage option, is going to stack directly on top of that. So it's going to give you a coverage range from 80% up to 86%. So it's just going to give you a small 6% extra band of coverage. And then ECO, which is the enhanced coverage option, will stack on top of SCO. So that's going to cover you from 86% up to 90 or 95%. You may have heard your neighbor make a comment about, my agent got me a 95% trigger at an affordable rate. And while that's not entirely true, they may have that 95% trigger with the ECO policy. These are area-based plans of insurance. So that's the big thing that we want to reiterate, is that these are going to be looking at county yields when we're looking at triggering losses, not at the individual yields you produce on your farm. So with cost of production remaining high, prices are not quite where we want them right now. Guys are looking for ways to add on additional coverage, and this is a great way to do that. So these are not new products. The big change this year is the subsidy change. So that is going from 65% up to 80%. So this is much more affordable than what it's been in the past. I had a lot of conversations with producers last year on these where we looked really in depth at quotes. We looked at the expected county yields. We looked at the historical loss data. And I had a lot that were on the fence about taking it. And I had some that just decided not not to, just wasn't within the budget this year or last year. So I would highly recommend that you take a look at these again this year. If that was you, I would talk with your agent, see if you can look at quotes and see if you can fit this in this year. So March 15th is going to be the deadline to add these on to your policy.
Yep. And you had mentioned SEO being 80 to 86%. Really, that can go down any level that you want. We see a lot of
Right.
people at that 80% kind of look at making that jump, and I think we'll go through that a little bit more as well. So,
Yep.
do you think ECO and SEO should be added to every policy, or are there ones that you should target?
I don't think that they should be necessarily added to every policy. I think it's something that you need to look at on an individual basis, just like anything, every farm's different. If you're someone who your yields trend with the county, so the county's up, you're up, the county's down, you're down, this may be a good fit for you. If you're someone who trends above the county, this may be a good fit for you. If you're someone who needs claim payments at the end of harvest, or if you need claim payments by the end of the year, not going to be a great fit for you. These are going to be, again, based off of county yields. So we have to wait for those final yields to be established. And so those payments are going to be delayed. So if you take this for 2026 and you have a claim that's due, you will not be paid that claim until the following summer. So summer of 2027. Definitely something we want to make sure you're aware of. And then, something else to go along those lines, I've had a lot of conversation around, should I decrease my multi-peril coverage and then add these on? We can certainly do that. We don't have an issue with doing that. We do want to make sure that you're aware of the implications behind that. So if you do decrease your individual coverage level, you're decreasing your individual guarantees, you're decreasing your individual triggers. So we definitely want to be aware of that before we decrease. And then also, if you're someone who has taken Prevent Plant in the past, or if you're concerned about Prevent Plant in the future, if you decrease that coverage level, you're also decreasing your Prevent Plant payment. And then with that, Prevent Plant Plus 5 has also been removed for the 2026 crop year. So that's a change with the One Big Beautiful Bill Act that has been removed. So if you're someone who has had that on your policy previously, it's not going to be on there for 2026. So again, decreasing that Prevent Plant payment even further. We're hopeful that that's something that they will add back in the future. There's still some conversation around that. But as of right now, that is no longer on your policy if you've had it before.
Very good point. And I think really, it's not a one size fits all. Yeah, I like how you said, it's a conversation. So it'll be valuable for certain producers, but just making sure that you're having that conversation and understanding all of the implications is extremely important. So you also mentioned Beginning Farmer and Rancher. How has that program changed for 2026?
Yeah, so we've had a great change to the BFR program as far as qualifications go. In the past, if you had 5 years of history or less, 5 years or less of history in crops or livestock within any state, then you would qualify for BFR. They have expanded on that. So now it's 10 years of history or less on crops or livestock. So this is also applicable on the livestock side. So if you have an LRP policy, this is something that you could also have on there as those BFR benefits. So if you're someone who's been in the industry for 6, 7, 8 years, this may have fallen off recently. I would definitely check with your agent. Make sure that you have the right application signed timely. We have to have BFR on there by March 15th. Just make sure that you have everything put back in place. This is something that can be really easily overlooked, and we want those benefits to be on your policy.
Yeah. And I mean, even as we look at crop insurance and the BFR benefits, we're always having that conversation, trying to add it to as many policies as possible. But on top of that, I'm really proud to work for FCS, where they're dedicated to it on both the crop insurance, but the loan side as well. So we see several different programs that the loan team has with Connect, and then they also have loans for fair projects that they can look at. So if you're a beginning farmer and rancher who's joining us today, ask your agent about the BFR benefits that Sadie mentioned, but also ask your loan officer in your local office about any kind of loan products that they have that may help you as well. So another thing that we saw this year was T yields increasing. So can you tell us a little bit more about what that means? What is a T yield? How does that go?
Yeah, so RMA looks at different crops each year. They review different crops. So corn and grain sorghum were reviewed for 2026, and so most of those T yields have increased, which is great for our producers. For example, Boone County, here where I cover, corn T yield went from 139 to 152. So that's a 13 bushel increase. So pretty substantial there. So this is going to come into play if you add ground on your policy. You might be looking at using the T yield to establish that guarantee or that database. If you're breaking out ground out of CRP, or if you're breaking ground out of pasture, the T yield comes into play there as well. So this is a great change for us for the next few years. Beans are going to be reviewed next year for 2027. So we're hopeful that we'll see some good changes to the T yields on beans as well. Plant dates will also be reviewed. So I know I have a lot of producers who come in and are planting beans earlier and earlier. Right now in my area, the initial plant date on soybeans is April 15th. So we're hopeful to see that initial plant date possibly get moved back.
Especially as we go into kind of a dry planting season, I think a lot of people would be wishing maybe beans had been reviewed last year, and we were seeing some changes to them this year. So we'll be hopeful for that for next year. Just kind of an off the wall question: what's your favorite thing to find as you're reviewing a policy?
Whenever I'm reviewing a policy, I like to look at that policy as a whole picture, look at that entire operation. And I like to look at the unit structure to start with and just make sure that they have the correct unit structure that makes the most sense for their operation on there. For example, if you're someone who has all of your ground is pretty centrally located, it's all pretty close together. You might have a section line that comes right through there. Your current agent may have you on a basic unit structure, and it may make a lot more sense to throw on an enterprise unit structure, and then it functions the same way, but your premium gets cut in half. So that's probably my favorite thing to find, is just those major things that can really help with that premium.
I would agree. I always tell people, I'm like, you are the luckiest person of today. You've got the section line that runs through your one field. It's fantastic. So when I look at mine, there's really three things that I like to look at, or my favorite things to find. So I like to find policies where our options are starting to make sense. So we have the alphabet soup of options: trend adjusted, yield exclusion. Particularly trend adjusted and yield exclusion work really well in certain situations. And they don't always work when your databases are new. They work better as your databases get older, or we're having yield exclusion or loss years. So when those options really start to make sense, sometimes it can make your premium cheaper and you actually get more coverage. So those are always fun to find. It's fun to really look through and find in the databases just different ways to customize. I also, beginning farmer and rancher, we mentioned that earlier, just working and getting somebody started, making sure they're set up correctly. I really like that. Along the same lines are people forming new entities. So in the last few years, we've seen a lot of people that are going to LLCs, they're going to trust, whether that's just succession planning or just planning for their operation in general, making sure that we're getting those set up, the production transferred, and working through how to best customize that for their operation. I really enjoy those.
So you mentioned the other day that you've had some producers who are talking about, the 85% coverage level. In your opinion, do you think that everyone should be looking at 85%?
So 85% is, it's an option that we have. The subsidy, though, really decreases as you go from 80 to 85%. So when I have somebody come into my office and they're saying, hey, I think I want to go to 85%, that's telling me that they need more coverage than their current policy can offer them. So I like to look at different ways. How can we fill that gap and maybe get them better coverage? So with a lot of our insurance companies, we have private products that can help to fill that gap. And it's actually cheaper than going to the 85%. So my advice to those people is keep an open mind. Let's look at some different options and really customize that best to your operation. So do you find that there's a level that works best for your customers, or where are you finding people at this year?
Yep. So you mentioned premium subsidies. This is a good place for me to throw in that the premium subsidy rates have changed for most coverage levels and most unit structures. So that's gonna be a great change for guys. I know I've had a lot of phone calls where the first thing they ask is premium's gonna be cheaper this year, right? So for most cases, it will be slightly cheaper. Obviously, you need to look at those quotes and compare to last year. As far as what coverage level fits best, I mean, I think we keep saying this over and over. I think there's no one size fits all for crop insurance. I will say majority of my producers are sitting somewhere in that 60, 75, 80% coverage level range. But as far as that subsidy rate goes, it's gone up anywhere from 3 to 5%. So if you're someone who has been sitting at the 70% coverage level on enterprise units, that one actually is not changing this year, but 75 and 80 are going up 3%. So you may want to look at revisiting that this year and maybe increasing your coverage. So again, we like to customize that based on your operation. So, if you have enterprise units, that is going to lump everything together during a loss or during a claim year. So you might want to fill those gaps with different private products, like you mentioned. But, we also have hail, we have wind insurance, we have replant extra. We just really want to make sure that you're prioritizing those premium dollars for what makes the best sense for you and where you're located. So
that makes a lot of sense.
yeah. So switching gears here, we've been
Yep.
fielding a lot of questions on different FSA programs. So
Yes.
what programs are you hearing about, and how can we make those FSA visits the most efficient for guys?
Yeah, so we're really seeing two FSA programs that are taking the stage currently. So the first one is SDRP, so that Supplemental Disaster Revenue Program, and they've had a phase 1 and phase 2 of that. So phase 1 was shallow losses in 23 and 24 that triggered a crop insurance loss. Phase 2 is losses in 23 and 24 that may not have triggered a crop insurance loss. So the deadline to apply for those two, or for that program, those two phases, is April the 28th. If you have not talked to your FSA office and asked if you qualify for either or both of those phases, I would highly encourage you to reach out and ask them that. The second one that we're seeing come out is the Farmers Bridge Assistance Program, also known as FBA. So that is one where you submitted your acres in December, or you had your acres submitted to FSA in December. And then we also expect originally the payment was expected to be made February the 28th. We found out last week that is going to require an application that needs to be completed through your FSA office. At this moment, though, they're telling us they don't quite have those applications yet. So maybe make a quick phone call into your FSA office just to confirm they have those. We've heard the earliest that they will have those is the beginning of next week. So touch base. There will be multiple ways that you can apply for that. So online options, in-person options, or potentially even mail-in applications. But once again, just good communication with your FSA office will really help you there. I also wanted to note on the SDRP payment, that is tied to crop insurance. So there is a crop insurance requirement. If you take that SDRP payment, you're required to carry federal crop insurance for 2 years. That Farmers Bridge Assistance Program does not require that same crop insurance linkage. So just make sure as you're signing for that, you're having that conversation, making sure your coverage levels are adequate for that.
Yeah, I do believe you have to have at least 60%. Correct.
Yep, that is correct. So we've had, the FSA offices in my area have been great. They've been telling people, like, it looks like you're below 60%. Let's get you bumped up, and trying to proactively have those conversations.
Yep.
So perfect. Well, thank you guys for joining us here today. Do you have any final thoughts that you want to throw in, Sadie? I feel like we kind of covered everything pretty good.
Yeah, I think so. I don't have anything.
All right. So Sadie, you have a question?
I've got a couple questions for you gals.
Right.
One of those is going back to you talked about the beginning farmer program and kind of some adjustments there. So what information do you need to use the beginning farmer program? Can you expand on that a little bit more, please?
You want to take that one, Sadie?
Sure. I mean, I can, fill in my gaps here. So on BFR, we have to have just an application that's submitted along with your policy. So on that, we just need the information we already have for your multi-peril insurance. We also need an application for any SBIs that are listed on the policy. So something to note for sure here is if you have an LLC that you just set up, or a different entity this year, instead of just the typical, spousal policy, be aware that everyone that's listed under that LLC must also qualify for the beginning farmer and rancher, or they have to have that experience qualification there in order for that to go through. So we have to have an application for each person individually. If you have any years that you're excluding, so that could be, if you're under 18, I believe we need a driver's license for that, and we need a transcript for that as well. Anything else you want to throw in there on the exclusions, Jessica?
Yeah, so the transcript for post-secondary education. So you can just take the 18, or you can go all the way to post-secondary education. I also had my first one where they got married after they had signed up for beginning farmer and rancher. And so we now have to submit a new app for the wife. So if you're having any of those entity type changes, just make sure that you're communicating those, because a lot of times it comes with some extra paperwork and forms for us too.
Awesome. Thank you for that. And then there's another question that's talking about APH. And so how does APH impact the SCO and the ECO coverages?
Yeah, so SEO and ECO, they trigger, like we mentioned, based on county yields. But those payments are going to be calculated using your underlying APH. So you and your neighbor may both have ECO at the 95% coverage level. You're going to trigger at the same time, but your payments are going to look different because it is going to be based around that underlying APH. The calculation with the SCO and ECO payments is a little bit more complicated compared to your normal multi-peril policy payments. There's a payment factor that's in there. So just keep that in mind. It is going to be based on the APH when they're looking at calculating your actual claim payment.
Okay, so one more question. So you were just speaking about yield, and then earlier you talked about T yields and county expected yields. So what are those the same numbers? Can you expand on the difference, or are the similarities between county expected yields and county T yields, and what if those are the same numbers?
They're not the same numbers. The county expected yield is what we use on the SCO and ECO insurance, whereas those T yields we use on that multi-peril policy. Jessica, do you want to elaborate on where those come from for me?
So both of those are set by RMA. Really, with the SCO, ECO data, we see them use real farmer data. So that's part of the reason why why that payment is delayed all the way until July, is because we're waiting for that data to come in. When it's set, like I said, both of those are set. They don't really give us a rhyme or reason. The T yield is kind of supposed to be reflective of how the county does. But like I said, both of those are set by RMA and something that can be reviewed prior to choosing those on your policy.
Awesome. Thank you for those additional pieces of information and just, kind of that extra question answers. Going to open it up to any other questions for our audience members. Feel free to drop those in the chat. While we've got some time here, I am going to go ahead and share a few reminders in addition to what Jessica and Sadie have said. If you are enjoying education brought to you by FCS Financial, I would love to invite you to our Empowered Women, Empowered Agriculture seminar. It's an in-person seminar that is free and is going to be hosted on Tuesday, March 3rd at Herman Hill in Herman, Missouri. This free educational event is going to feature Mary Kay Thatcher and Mark Stewart, and it's designed to give you the financial tools and market insights to lead your operation with confidence. The registration deadline is tomorrow, so we're going to receive your registration. Your registration email is going to receive a recap this afternoon, and so that will contain a registration link if you're interested in joining us in Herman in March. Additionally, as the ladies had mentioned, if you're working on FSA programs, remember that SDRP deadline is April 28th. So Jessica and Sadie are happy to help you get your paperwork in order and to make sure that FSA visit is efficient as possible. And then if you aren't already working with an FCS Financial crop and livestock agent, we'd love to help you build your 2026 strategy. And you can find a local expert at myfcsfinancial.com, and a link will also be included in that recap email. So at this time, I am not seeing any other questions coming through.
That means we answered them all well.
That's exactly right. So what I'm going to do is I am going to drop a link in the chat here to our survey on today's session. This survey is really helpful and really important for us to be able to take in your feedback and to provide you educational opportunities like this that are most relevant to you and your operation. So it'll take you less than 2 minutes to complete, but would love to have your feedback and information via that survey. It is completely anonymous. And with that, Sadie and Jessica, thank you both for sharing your insights, for your time today, and thank you to all of our attendees for joining us. We wish you a safe and very successful 2026 season. Thank you all.
Thank you.